Okay, hello YouTube. So sorry for my voice. I'm still a little bit my throat is still not the best from the surgery, but I wanted to make this video in a while now, and finally getting to sit down a little bit earlier than usually today. So I'm not trading right now because I only trade part after the US Open usually. So like 3:30 here in Europe my time, and at 9 US time. So I wanted to break down my trading strategy, so my personal trading strategy I use, the style I trade, what I use, what I look for in entries. So you know a little bit what I'm talking about when I'm doing my videos, because sometimes I think when I'm doing my videos, you don't really know exactly what I mean with the things I say. So at first, what's always important for me is I look a little bit at the general market structure. So price action in general. I like to use the 4,000 tick chart and the hourly chart on the ES to kind of get my levels for the day, where I want to go, where I might be trading around which level. Because it's always important. You got to remember the bigger players are most of them are trading around kind of obvious levels and hitting at around obvious levels, and I a little bit want to look for the bigger players and then try to figure out what they want to do and pretty much follow them. That's also why I have my times and sales here. So I have 3 different times and sales, as you might see here. So this is times on sale for every order, also for every size order. So you can see from 1 to anything pretty much if it's hit. So these are all market orders executed. Then here you have a little bit different one. So this is 10 and up. So these are all orders bigger than 10 contracts. So this is kind of mid-size orders. So in order to mark it in with 10 lots, you gotta have a decent account. You can't order, so you can't go in with 10 lots on market if you're a small trader. So I say it's mid-size. You also have to remember most of the people do not get in at one price. They like to spread it up a little bit. And this here are like my institutional tape. So when you hear me say my videos institutional tape or big buyers, big sellers, for example, this is this. So this is everything from 100, I don't know, from 50 and up lots. So if, for example, if you see here, I think this was still from yesterday evening at 25. So when people hitting 170 or 130 lots market, at one price, and this probably was the same guy hitting it 25 at the same moment. So he dropped like I don't know, like 200, 300, almost 400 contracts market. You gotta be aware of those people. if there are traders who are willing to drop 400 lot orders market, they have more size to put into, because you have to remember that you can't just get in on one price with 400. Or if you want to get, for example, you want to execute, your big institutional trader who wants to execute 1,000 or 2,000 lots, you can't go in like and press market in with 1,000 lots, because you just get so much spread. You're gonna grab all the liquidity and you get a lot of spread, so you gotta put in a few at limit, then maybe here a few market, you wait to pull back, then another few market and a few limit. So they try to split it up always, and that's what kind of I'm looking for. And I want to see, like, for example, the bigger players hitting hard, always trying to get their orders in. If you see absorption here, for example, you see them bidding, holding the bid strong, and at the same time you see the big institutional buyers also hitting market. Then you kind of know, okay, for example, if you're trading at a high and we see, so my breakout strategies, for example, are like this. So when I see them absorbing everything here, and you see mostly small sellers hitting them, and they are just absorbing. adding to the contract, you know, and then you see also them stepping up aggressively and marketing in as well, then it's kind of a sign that we might break out. You can never know, but my thought process is, for example, this, that okay, they're filling most of their size here because they want to get a good price, you know, so they try to fill it, for example, here with limit orders, and once they have like 70% or so in of their order, then they're gonna start to market buy aggressively and then try to push the price up, and then they have an average, you know, an average buy around here, and they're gonna market it up, and then eventually they're gonna take profit here. So then you see price stall, they take profit here, you see them absorbing, because then you see the FOMO kick in. First you have all the guys who sold here, who have then, you know, have to, because there's always two sides to order, so when they sold here, small guys usually have a tight stop, so they want to have that stop around here, and then, or here for example, so they sold here, have to stop here, so then they market in, bam bam bam, clean this up. Then you have also buying. What's happening, then you have them buying, their stops get turned into market buy orders, because a stop is always a market order, and then they are filling their big so their limit orders, which they have set here for take profit, for example, they are getting filled with your market stop orders, for example. So that's kind of my thought process on the breakouts, and that's what I kind of try to look for. Then the next thing I'm trying to look for are these bell curves. Okay, so these are footprint charts on the DOM. So pretty much this is how many contracts are traded at each price. You have here a daily, or this is since I've started my computer today, not the full day. But once the session starts, I have this reset. But this is right now, since I'm sitting here or having the computer started. You see these two bell curves, okay? I call them bell curves because they look like a bell curve. And it kind of says, okay, here is fair price, okay, or here was fair price earlier. So usually what happens is you see price trade inside a bell curve from high to low of a bell curve, and obviously most of it in the middle. But because you always trade through this, your price get up here, they say, oh no, here it's too expensive, then they fall back down and they trade here, no, here it's too cheap, and they try to figure out what's fair value, you know. And then fair value is the middle of the bell curve, for example, where the most prices are traded. That's fair value. But eventually what's going to happen is you have here a bunch of orders building up, you know, and then eventually it's going to break. So the breaks is what I'm looking for. So for example, then on the top of a bell curve, on the low nodes, usually this is the how should I call it, the not fair price. So this price usually should not be fair anymore if we were trading down here. Okay, so this is too expensive. So you don't want to see buyers aggressively buying here, because if it's too expensive, no one's gonna market in, you know, because when you market in, you pay the spread, so you pay more than when you limit in. So when you're at the top of a bell curve, usually you don't want to market in, because you're gonna get limit filled anyways, a little bit lower. But when you see on the top of a bell curve that buyers are still aggressively buying, okay, so still marketing in, and it's big players who are buying, and you see a strong limit order, so a strong bid, for example here, then we might be in for a pop. And then usually what happens is you trade pretty fast through this. Now it's a kind of bad example, but it's also, like I said, it's pre. That's why I don't usually trade so much pre-market. But you see here another little bell curve already forming. So this is the new. So price doesn't really. So we have here one bell curve, here a small bell curve, and here a bigger bell curve. But usually what happens is if you have one bell curve and you trade above it, then you go into the next bell curve, and then then you trade within that bell curve. So it's always price pops up, tries to figure out fair price, and then eventually it's gonna fall back down to the other fair price zone, or it's gonna pop up and build another zone. You never know. That's why I always gotta have stops in place and always manage risk overall. So risk management is the most important thing in trading. But here you can see we're trading around this area. Here's lots of volume already. So this is already kind of a bell curve. So let's see, for example, if we can get a breakout to say to one of the sides. You see, now we had very aggressive sellers hitting. So boom, now we're back in this bell curve, and all those who traded here got stopped out. Usually, when you trade into the middle of, so that's what I'm looking for. Usually, when you trade up to the middle of the next bell curve, then this next bell curve is most of the time accepted. So then you trade around the next bell curve again. When you only come to the top of the next bell curve, it could happen very easily that it was just a fake out and comes right back. So that's yeah, what I'm looking for in general. And you can also see I have here, this was so here we hit the low node, you see, and now we're coming back to the high node. We're traded above the middle of this bell curve. So kind of what I like to see, to be honest, today. So what I'm looking for in general today is price maybe to come up to test this high again, so to the top of the bell curve, so 14,190 or something, and then the question is if it falls back down. Or but we pushed through the middle yesterday, so generally I'm a little bit long biased today, because I kind of think, okay, we pushed up hard yesterday, very little pullbacks, only a couple short pullbacks, although Albertson happened overnight. But anyway, I'm drifting off. So that's in general my trading strategy and what I'm looking for and what you hear me say in the videos, okay? Then what I use Apex. I already told this a couple times. So you can see here I'm pretty much always trading with this is my main account. So you see it's a PR, so that's a performance account. So it's a live funded account from Apex. And no evaluation or demo or sim or whatever. I'm also using Trade Copier. So I have 9 other Apex accounts that following and copying every trade. So when I enter a trade for one lot, then all the 9 other followers accounts also enter. And yeah, so I pretty much trade 10 contracts and not one, even though I'm just trading one contract. But yeah, that's how that works. And the reason why I do this is because of the drawdown. You have 2,500 trading drawdown per account. So if you use 10 accounts, you have 25k drawdown, which is way more. So I only scalp for a couple ticks usually. So like 8 ticks usually on average is winning trades for me. So I only scalp for a little bit. But hey, if you scalp for, I don't know, $100 a trade, for example, and with a pretty high win rate, it's good. With 10 accounts, it's $800, and I also don't have to risk so much, because I risk an average around 10 ticks, so also like $100. But if I would be trading 10 slots on one account, I would be risking $1,000 a trade, which just doesn't work out, because if I only have 2,500 drawdown, and if I do it with this, with Apex, with the 10 accounts, it's a lot easier, and you can manage drawdown a lot better. That's just it for me. So the basics of my trading strategy. Once again, I look the footprint, I look the free tapes. I also try to look for absorption here, and I also like to look at price action in general. Yeah, that's about it for me for today, for my videos. If you have any questions whatsoever, I don't know what videos I should make anyway, so just Feel free to comment, and I'll try to get back to you and gonna do a video on it. Also, if you want something more in-depth explained, or this was too complicated and you're a beginner, just let me know. If you want to start trading, please manage your risk. Trade, if you think you should trade one lot, trade one micro. Okay, that's what I always try to say. You have to define the size you want to trade, cut it by 10, and then you're probably in the right area. And once you're profitable or for a while, you can always size up. So that's it for me with my trading strategy, and I hope it helped one of you. But trading strategies and styles are very individual. You gotta know what works for you, find out what works for you. That what works for me. This doesn't mean it will work for you, but I hope I could help you a little bit with this video, and just let me know what else you want to see. Have a good day and stay green today.